Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a phenomenal day. We're taking a quick look here again at RUNE, seeing what's going on with Thorchain here. I got a request from one of our community members here. If I'm not mistaken, it is G, one of our newest community members there. Welcome aboard again. Thanks again for asking that I cover this. You are right. It's been a little while since we last looked at it. Quickly to preface though, congrats again to our community members as well. Some phenomenal trades here from AVAX, Reef 100%, Atom, QNT, Dogecoin, AVAX, Cardano, AVAX, Crow, Doge, AVAX. It's just last 12 hours. It's hard to keep on track of that. Anyways, these are my signals provided to my community members. Keep in mind, we do have limited slots available. CryptoCash.tech, if you're curious about that, we've got a lot of new members here. So thanks again for jumping on over there. Really happy to work with you. It's going to be an awesome experience. Okay, so what we want to look at first is the backend data. Okay, so RUNE, let's see what's going on here with the liquidation levels, because a lot of coins that are moving like this have heavy concentrations, which we can see right there. Just a note too, before we go any further, there is a heavy concentration of longs at 3.3, so $3.30. In other words, those are liquidation levels for long positions, and if the price hits those levels, then the likelihood of liquidation is extremely high for a lot of people, and basically just means that whales constantly push the price in either direction to be able to swipe those levels out. We can see here they pushed it down as low as 622, and we got a ton at 619. Okay, so 619 is a potential target for this coin if the price were to continue to pull back. So just know that that might be a support level in a sense. It's also a strong liquidation level that will potentially get you wrecked. So that's exactly why you don't put your stop loss exactly at support levels, if, for example, that is one. So let's look at 620 just to give perspective here. That's when the price went down right here. Let's quickly note, let's see where the volume is at. We can kind of see, yeah, there's a decent amount of volume at about 640, but 620 is not really all that much. So what I'd recommend, a lot of times people get the question a lot, what do I do there? Do I set my target just below the most recent low? Not exactly. You want to kind of go below a Fibonacci retracement level, a little safer that way. This 0.5 level at 610 would be a lot safer than a support level or just say a stop loss at 620. Because if you do a stop loss at 620, you'll see that candle wick come down, wreck those shorts for a nice little double bottom. The price takes off as if it never happened. So you're sitting there with your thumb in the air like, what the heck, right? It happens all the time, unfortunately. So that's why we look at liquidation levels. Make sure you pay attention to that. That said, let's go ahead and look at the larger time frame and work our way down. So we are still honoring our ascending trend from before by the looks of it. Yes, we are. 20-day SMA is squeezing a little bit closer, but generally speaking, we are in good shape there. Okay, so being above the 20 really just gives us indication that we are on the right side of tracks. We're looking good here. We're truly bullish. Doesn't mean, keep this in mind, just because we're above the 20 doesn't mean the price cannot still come down. It just implies that that's kind of a warning sign if the price hits that level, that we need to pay attention that the momentum might be shifting. Okay, it's really what we're looking for. Speaking of momentum, got a MACD divergence here. This is definitely a pretty solid divergence, letting us know further downside is possible. So the last time we had a divergence, for example, was right here, and the price ended up going up. So again, not 100% guarantee. Never take a trade on one indicator, but that does tell us the overall sense here is the momentum is trending down. Okay, that's roughly where we're at. It doesn't take a rocket scientist to know the last 4 days have been red. Okay, but what we do want to look at here is that stochastic is swinging down. That's typically a bearish sign. RSI is coming down below the money flow index, which is somewhat of a bullish sign. Okay, so we got some conflicting information here on the daily. I don't take trades solely on the daily. I just look at the daily time frame to get perspective on what in the heck is going on in the big picture. So we have some good and some bad on the daily time frame, right? Mostly good though. Keep that in mind. When we take a look at the 4 hour, we can see we are below the 20 and the 50. Never a great sign. That kind of lets us know that we are trending lower. While we do have a higher high pattern here and a higher low pattern, it hasn't officially confirmed yet. Okay. In other words, a lot of times these types of channels, when they start from the top, they'll work themselves up and then break down. Okay, so again, since it started from the top here, if we're going to work ourselves into a higher high, higher low pattern, the price action has more propensity to lower than it would be to increase based on that, based on it deriving from the top. Okay, so if you're familiar with candlestick patterns at all, that's generally the rule of thumb. Wherever it started from, it's going to go the opposite direction and keep going. Right, so bull flag patterns, they do this here and then they continue higher, for example. Okay, all right. Oops, button pressed wrong. All right, so here we go. 4 hour time frame. We can summarize looking pretty decent, but also not fantastic. What I mean by that, we take a look at the RSI. We're below 50 on the RSI. Not great. Money flow index is increasing. Kind of good. Stochastic swinging down, not great. MACD diverging, not great. Okay. That said, we look at liquidity levels. We've already addressed lower liquidity levels at $6.20, or $6.19 to be specific. There is an upper liquidity level at about $7.30. Big surprise, candle wake up, the price pulls back. Nice little double top there. The price action may try to retest that level and swipe down. I'm leaning a little bit more towards the price pulling back to $6.19 now. We have a lot more bearish signs here on the 4 hour that I like to kind of acknowledge, and just the simple fact that we have that such a high concentration of liquidation at this level. I'm really concerned for the 615 to 620 range. That seems like a very, very scary place to be. So if you got some leverage in that level, consider margin, adding to your margin, or more importantly, closing your trade in profit. Just so you know, closing trades in profit is not a bad thing. Closing trades out of profit isn't a bad thing either if you're going to mitigate more loss. Okay, you got to learn to take your losses and maximize your gains. Again, different strokes for different folks, obviously, but you cannot trade if you're not willing to take a loss. Okay, the last thing we want to look at is the hourly, and we'll wrap it up here. Ichimoku cloud, we are below the cloud, another bearish sign, or technically within the cloud, but near the lower lead effectively. Conversion line is now below the baseline. That's a bearish sign, and lagging span is trying to come free from the price action there. So this is ultimately one of those typical signs where you see people trying to take trades right here because it breaks through a little resistance level. We established a higher high, but just kidding. Nope, moving average tells you you cannot take a trade right now. Okay, so we're in a situation where you do not want to take a trade, not advantageous whatsoever. If you do take a trade, I'd lean more towards a short than a long. I would say take profit target at 620, 625, right in that range would be good. Do not get too greedy, but again, that's why you set multiple profit targets. Speaking of multiple profit targets, did you know there's an exchange that allows you to do that? They also have trailing stop losses, no KYC, no VPN. We're partnered with them mainly because they offer good opportunities for our community members, and it's a fantastic exchange for US Canadian members who are having trouble with KYC and VPN requirements. Okay, so if you use my link below, you'll benefit from significant bonus rewards, and we're also working on a trading competition. We'll have that available shortly. So really cool stuff. But honestly, RUNE looks like it's ready for a downfall, and I'm not saying like a monstrous drop, but most timeframes we're seeing some bearish behavior, and unless we see a significant amount of volume at this price point, which keep in mind there is some volume support here, but we're near the bottom half of that, and I'm still not sold on this price going up from here. That's just me. All right, so what are your thoughts? Comment below, like the video, please help us grow the channel so other people can view these wonderful videos here, and everyone has a better chance to become a better trader. All right, folks, you want that for yourself? CryptoCash.tech is a site, link down below. Limited slots available. Hope you have a great rest of your day. See you in the next one. Take care.